Hello and welcome to Lipper's Fund Flows Insight. I'm Matthew Lemieux. Today we're going to be taking a look at our weekly flows numbers for the week ending July 18th. And the week started pretty well. A lot of people were concerned with some of the earnings coming out, but really JP Morgan topped that list, and they came out, and even though they had their $4+ billion loss, they came in over expectations, so investors felt good about that. Plus, also there would have been some concern previously about China and whether they're going to continue to see drops in their growth rate, but they came in at about 7.6% for second quarter GDP, and that really lifted Asian markets, and it kind of seeped into the United States as well. And from there on, it was kind of smooth sailing. And I think a lot of it had to do with not too much news in the markets we haven't seen over the last couple of weeks over the concerns in the Eurozone. Not to say that they're not still there, but really people kind of had set that aside in their mind. And so at the end of the week, we really saw most of the markets up, plus 3%. With the NASDAQ leading about 3.48, 3.5%, so a good week overall. So let's take a look and see how this really translated into our flows as we look at our macro groups. And overall, for the week, we saw roughly $14.9 billion leave the conventional mutual fund business. As you can see, once again, when we see big numbers and outflows like this, they're really being trended and pushed forward by money market funds that push out about $18.7 billion. Equity funds, though, on the mutual fund side, about $400 million, even kind of small, but on the plus side, taxable bond funds continue to bring in money, about $2.6 billion for the week, and municipal debt funds also had net inflows for the week of about $800 million. So overall, we saw that equity did quite well. I mean, $400 million is not really anything spectacular, but this was the second consecutive week that we've seen inflows into equity mutual funds. So it seems that some investors, and maybe again, some of the decent news coming out of the earnings, maybe a little less concern out there, at least visibly and publicly, about the Eurozone, helps some investors feel a little bit more comfortable, put some money into the market. If we look at where that split was, we saw domestic about $123 million and non-domestic about $269 million. On the non-domestic side, most of that really was going into emerging market funds. So overall, pretty good. Again, 2 consecutive weeks of inflows. We'll have to continue to see if that goes ahead and investors feel comfortable. We'll talk a little bit about that towards the end. Next, though, we'll look at ETFs, which again, a different story, even though on the same side, we saw about $5.7 billion go into equity ETFs. Once again, the vast majority of that was going into the SPDR S&P 500 Trust, SPY, at about $2.2 billion. But again, we saw some investment going back into the small caps. Russell 2000, iShares Russell 2000, IWM, about $1.5 billion in. So even though nothing huge, I mean, we see big fluctuations in ETFs, it did seem investors were coming back a little bit and putting a little bit of risk on. But let's go to the other side of the story, which is taxable bond funds. Taxable bond funds continue to bring in assets, $2.6 billion this week. That's their 6th consecutive week. If you look at their 4-week moving average, it's about $2.1 billion a week. And really, we haven't seen that number since mid-May. So we've kind of seen it cool down a little bit. Now people really kind of coming back into the taxable bond mutual funds. And if you look at the split outs again, it's a similar story. Investment grade really taking the top, $810 million, and really investors looking for quality. But then again, there are still some investors out there looking for yield. High yield pulled in about $562 million for the week as well. The third group I really want to point out, as we've talked about in the past, is mortgage funds. Mortgage funds continue to draw in assets, $354 million. This group has seen 33 consecutive weeks of inflows, and they have about $17.5 billion year to date, which has already surpassed some of the large amount of inflows that we saw in 2009, about $15 billion. And it's the largest, and it's on pace probably to beat what we saw back in 2002, which ended about $24 billion. So investors are really feeling comfortable going into mortgage funds. I think they feel that maybe the housing market is bottom, has stabilized, and prices were going to start going up in the near term and in the long term. So investors keep going in that direction. Also, we'll look at taxable bond ETFs. With this side, we really haven't seen much movement this week. We only saw about $200 million in net inflows for taxable bond ETFs. The vast majority of that coming into junk. HYG actually was the best recipient of about $200 million. On the other side, though, we saw investors kind of fleeing away from Treasury-based products. The Treasury ETFs lost about $500 million, with SHY losing about $300 million of that, and that are going to be the short-term Treasury-type offerings, as investors really probably don't see them much benefit out of that. If they're going to stay in Treasuries, probably going to the longer end of the curve. The third group we're going to look at is Muni Debt Funds. Muni Debt Funds have done quite well. They continue to do quite well this week, about $800 million coming in. Of that, National Muni Debt kind of an ominous number, $666 million coming in, 282 of that going into high yield. This is the largest inflow into Muni Debt funds for the last 10 weeks. And we've really seen some downward pressure on yields in Muni Debt funds. I believe if you look at the AAA 30-year Muni Debt yields, they're sitting somewhere around 2.86%, which I believe is an all-time record. So there was definitely some downward pressure, decent performance to be made for investors holding those longer-term Muni Debt products. So last group we're going to take a look at is money market funds. As I mentioned before, this group really weighed down the overall money mutual fund flows group. It was $18.7 billion out. And it was really quite split. It seemed like it wasn't just institutional. Retail, as we've seen before, institutional pushed out about $13.4 billion, but also we saw some money coming out of retail, 5.2. So again, kind of supporting that story that investors felt a little bit more comfortable, maybe started putting a little bit of risk on coming back into the markets. So overall, as I had mentioned, the week started and ended pretty well. And again, we're talking Wednesday to Wednesday. Unfortunately, on Friday, the market, after its 3 days of upside return, gave it all back. Some current concerns about some earnings coming out. Microsoft actually posted their first loss since being a public company. Also, we've seen concerns as Spanish debt bank auction came in above 7%. And today, on a Monday, we continue to see market struggle as those concerns that I kind of mentioned that maybe weren't out there that kind of put some investors at ease seem to be coming now to the forefront. Spain well above 7% on their yield. A lot of concerned markets are having a struggle today. So again, we're going to have to look forward and see what happens. It's not just the Eurozone. I think there's a lot of issues out there that have yet to really been talked about, and I don't think really have been brought to the forefront of concern. Maybe in the financial sector, I think there's going to be some definite things that are going to come out with the LIBOR scandal. We're seeing HSBC struggling for some of their issues in litigation based on some improper actions on their hand. As well as last week, we did see another futures broker having trouble, missing money for clients, and so we'll have to kind of see how those pan out. If you want a little bit more information about the flows we're talking about today, you can visit our website. It's www.lipperusfundflows.com. You can take maybe a little bit of a deeper dive, or next time you can just visit us and we'll see how this news then plays out next week. Once again, I'm Matthew Lemieux, and this is Lipper Fund Flows.